streaming live from Facebook. We're streaming live from YouTube, LinkedIn. I think right now we're having little issues with Instagram, but if you want to go on Instagram, go to the legacybuilderclub.com so you can just check out this amazing interview on Mogul Mondays. So tonight we have our a great guest, my guy TJ. TJ, what's going on? Welcome to Mogul Mondays, guy.
Hey, bro, what's happening, man? Thanks for having me, dude.
Oh man, it's always a pleasure. Thanks for coming on, TJ. So just let the world know who you are, pretty much. On Mogul Mondays, we're gonna go over multifamily syndications. So let the world know who you are, what you conquering, and how are you the mogul in your realm.
My man. Yeah, so I'm my name's TJ Cremines. I'm in Kalamazoo, Michigan. So I'm like halfway in between Detroit and Chicago. Grew up here. I got into real estate kind of through a weird realm. I was in title insurance for a while, fell in love with real estate game, started investing about 5 years ago, and now I'm in multifamily. So what we do is we purchase multifamily properties. We use the power of syndication, so pooling investors' money together for the purpose of buying a cash flowing asset. We buy that asset, we provide the returns and projections that we're hoping to hit, and then some. And then we share in the cash flow and the profits moving forward in perpetuity. So I was introduced to kind of the power of syndication through a conference. I had set a goal to buy 50 units, and that was in 2020. We decided to buy 50 units, kind of see how it all goes. And we ended up buying 232 units. And then that grew from 232 to 300, 400, 500. And it just kind of took off, man.
Yeah, man, that's crazy. So you say, hold up, I go in there wanting 50, but then I get 232. So you're like, hold up, I think I might be in the right industry.
Yeah, it didn't suck. You know, I tell the story all the time, but it started off as kind of a joke.
Mhm.
Like I was flipping houses originally, and it was fun, and that the income was good. It helped me get out of my 9-to-5 job. You know, we had something sustainable, but man, I hated dealing with contractors. You know, and it was fun and it was sexy. And this is I tell everyone this, like, my wife thinks she's Joanna Gaines. I think I'd be a really good friend of Chip Gaines.
Mhm.
But dude, it sucked. I love the passive income. So as we continued to build up what we had, it just kind of took off. And after the first deal and the second deal and then the third deal, it was like, okay, well, I think we're onto something, and now we're here to stay, bro.
Okay. So, man, I guess typically when somebody is getting into like a new realm in real estate investing, they might have their ups and their downs or something that they had to kind of overcome. But it seemed like you kind of came into just freaking hitting a freaking home run. But in that home run, was it ever any like downturn or something to say, man, I don't know if I kind of got myself a little bit way over my head or anything like that?
Yeah, man. I appreciate you saying that, because you see everybody talking about real estate all the time, and it's always rainbows and butterflies, right? It's always the good things that are happening. And I feel like people learn a lot more from, from the negatives, right? That not necessarily negatives, but the bad things that happen, right?
Mhm.
Like, so yeah, I completely, we grew really quickly, right? I mean, we grew at a pretty rapid pace, and it was nearly detrimental to kind of our growth, because the things that I was trying to do, I lost track of in the beginning, in the sense that, we were, instead of us focusing on the first deal and then finding the second deal and the third, and then moving into the third, we went from first, second, third, fourth, fifth, just like that. And
Mhm.
we grew too quickly. I didn't have a team built. I didn't have the right setup. There was a lot that went into it that I didn't know. Looking back, I would have done it completely differently than we're doing right now. But we learned a lot from it, and since then we've grown, and our deals, we buy differently, we structure them differently, we navigate the investment and the investors differently. So all the things we've kind of adapted to, and it didn't hurt us too badly, but it did put a significant brakes on us for a while. So
Okay. Yeah, okay. I mean that's always good to know, because I know right now it's almost like that's the wave. Like everybody's saying multifamily. Like a lot of people, they're trying to get rid of like single family. So if somebody was coming new into the multifamily realm, what would be like a great piece of advice that you would give them to kind of start off first? Because everybody always think that you're gonna get into the game. Hey, I'm gonna be a millionaire. Hey, I'm gonna be a billionaire. I'm gonna buy $100 and bam, I'm rich. what's the first thing that you would kind of, just give them as a word of advice for any new investors?
Well, it's a kind of a three-part thing, and I was just talking with someone today about this. Is one of two things at the beginning. I would either become an investor in a multifamily deal
Hmm.
before buying my first multifamily as an operator, and or, um, pardon me, um, and or I would look to get someone that you look up to, someone that you emulate, that you're looking to emulate in the business, and I would look to see if I can bring them on as a coach or a mentor to kind of learn from them. Any coach or mentor worth their weight in gold has those experiences that they learn from, that they pay forward to the to their students, to their mentees. So I would look for something like that. But the other thing that I would really focus on doing is making sure that I have, like, what my financial freedom goal is, like what is my end game and my why. Because if you can get into this stuff and you can have, some significant success pretty quickly if you buy right in the right places and do right. However, if you don't have these things lined up and planned, you're really destined for failure. I mean, you get in there and you don't have that, that why that's pushing you, or that drive that's pushing you, and it's really not going to make you set up for success.
Man, I'm telling you, look, it's like you just dropped a couple nuggets right there. So the first nugget was you said pretty much about a mentor, because the mentor, that's what the Legacy Builder Club is a mentorship program. And that's how me and you met. We met from a mentorship program, RPM, which kind of like showed us how to raise private money and all that good stuff. So it's almost like we're knowledgeable young men, and like the Lord has blessed us. So it's like the knowledge that we have, we actually kind of impart to the world. So that's how I came up with the Legacy Builder Club, to actually teach people how they can get into real estate, from like A to Z, whether they want to do fix and flip, whether they want to do buy and hold, whether they want to do Airbnb on a short-term rentals. And I believe that you started your mentorship program as well too. So tell us a little bit about that.
Yeah, man. So I started a mentorship program and a coaching program called Multifamily Millionaire Mindset. And the
Hmm.
idea for me was, when I first got into multifamily, because I did believe that I needed to have someone that I could look up to, that I can work with, that I can be hands-on with. Everybody that I looked to go to was like 50, 60, 100,000 plus dollars to get in. And the barrier of entry was just too steep. And so I think I was thinking about it, and I was kind of piecemealing kind of how I put my first deal together, a little bit from here, a little bit from there, this person I looked up to, this YouTube thing, whatever it happened to be. And we created what we created. It was good, but as we continue to grow, like I said in the beginning, like, it was nearly detrimental to our business that we grew too quickly. I didn't have the right team put in place, the systems put in place. I didn't know what I know now. And so I was talking to one of my coaches, and they said to me, they're like, "Why don't you be that for somebody else?" I said, "Well, who the hell am I to do that?" And he goes, "Well, you already have people coming to you asking you questions. How do you analyze a deal? How do you find a deal? How do you do all of this?
Hmm.
What's the difference between that and structuring it and creating something special for them that they can back?" And I thought about that a little bit more, and I decided, again, like, having a good game plan and a structure. I was like, okay, so what is the end game with this? And the
Hmm.
idea for me was, I wanted to through multifamily real estate, I wanted to create 100 millionaires through multifamily real estate. And I wanted to teach them how they did it and be the person that I needed 5 years ago for them today. And so when we created this program, it was ultimately, how to build a team, how to structure a deal, how to find money, how to raise money, how to close the deal, how to navigate investments, how to find good markets, like, you name it, navigate with brokers and attorneys and CPAs, and all the things that I had to learn on the spot. Because
Hmm.
my very first deal, man, my very first deal, I didn't know what I knew, or I didn't know what I didn't know. And not only was I raising money, but I was doing the due diligence. I was finding an attorney. I was finding a CPA. I was finding a property manager. I was handling all the document. It was
It's kind of like
like,
you like kind of like a chicken with your head cut off.
oh,
Almost.
bro, it's
Hold
exactly
up.
what it was. And so I thought, like, if I could give that knowledge that I had from my experience from all of this, from our limited success, hopefully that we can provide some good stuff for people, and they can get onto their multifamily journey and feel a little bit more ahead of the game than I did when I first started.
No, no. I mean, that's truly a blessing because, like you said, with having a mentor now, you're a mentor. That's what a lot of people sometimes they look at the price tag and say, "Man, I don't want to pay 5,000 for this program or 10,000 for this program." But actually, it's like you kind of like giving a person a fast forward. So every mistake that you made, you don't the mentee doesn't have to make that mistake no more. So what it took you 5 years to learn or me 5 years to learn now can take somebody else like 1 or 2 months to learn. And and I mean, because for one, time is money, so it takes you a lot of time to learn that. And then for two, you just freaking just don't have to worry about the mistakes. So I believe a mentee is kind of like winning in both ways, pretty much. And then there's a thing of self-fulfillment to actually help another human being out. And like you said, create millionaires. So that way right there, we can actually just say, once we leave this earth, the Lord can just say, well done, my good and faithful servant, because you did your part, you imparted into the world, you made a good change in the world, and that's what it's all about, pretty much, you know?
Yeah, man, and that's and it's kind of I think there's a fate component to kind of what we're talking about here is when I first was thinking about what my real estate company was going to be and how we were going to build this and create this, we're sitting there and we're spearheading the idea of, okay, well, we'll do this capital group or, like coming up with these different ideas. And I'm looking at it right now and you can't see it, but I have my vision board right up over here to my left,
Hmm.
and in this kind of calligraphy font is the word legacy.
Okay.
And now you can see it right here. I mean, like the word legacy, it's Legacy Real Estate Group. And so you and I got talking. It was like, you're like, I've got this Legacy Builder Club. I was like, I've got Legacy Real Estate Group. And the idea was always to kind of be, leave something bigger behind than ourselves, right? And to be able to, make my kids proud, right? I want my kids to see the hard work that mom and dad put into what we do. And I just think it's that, this real estate journey, you can choose many different paths. I'm just blessed that it kind of took me down this road.
Man, I'll tell you, that's a funny thing right there because actually that was the first question I was supposed to ask you. What does legacy mean to you? So did you just explain to us what legacy means to you, or do you want to self-expand on that a little bit
Sure.
more?
Yeah. No. Yeah. A little bit on that. I mean, I've got two little boys. I've got a 6-year-old and a 4-year-old who are absolutely the loves of my life. I've got a wife that is way better than I deserve, and I just think about parents giving back to their kids, right? And I think about what being a good parent is for me and what I want to do. And part of what that is that I want to give my kids something that I didn't have. I grew up with a great childhood and I did a lot of things, but I want them to experience more. I want them to see more and do more, be able to give back and be able to help others that can't help themselves, or be able to, do these things that others are not able to, not in a necessarily financial way, but, teach them the ins and outs of money, right? Teach them how it works. Teach them how, what happens when you give back, or you name it, right? And I want to be able to leave a bigger impact. My wife actually pointed this out to me a long time ago, and in the play Hamilton, I don't know if you've ever seen that, but towards the very end of the play, there's a line from Hamilton that says legacy. He goes, legacy. What is legacy? It's planting a seed in a garden that you'll never get to see grow.
Yo.
And I'm like, that's it, right? Like, you put on all this hard work and you hope that you create something special and big enough, and that gives you the ability to impact not only, this generation and the next generation, but generations to come, whether that's within your family or whether that's outside of that. So that's what kind of drives us and pushes us to be able to do that. And also on top of that is every time we buy a property or sell a property in the areas we're in, we have a
Mhm.
give back component to that. So we go within the community to be able to give back to that community that we invested into. So whether that is, an individual boy or girl that needs help, or a family, or an organization. So we look to be able to give back to, to bless others. So.
Yeah, I mean, that's always good. That's where the blessings come from. And then also giving back to the community is almost like you have the buy-in of the community. So therefore, once you want to get another piece of property, then the communities already see that, what I mean, you're good with it. And
Yeah.
it seems like we kind of like related because legacy, I mean, it means kind of like the same thing what you were saying, but to me as well, it's almost about kind of like it's about the kids, the family, and everything. But it's all about how can you impart to another human being, and actually like with your general contractors, or you say you might don't deal with general contractors, but for me, I deal with general contractors. So for
Yep.
legacy for me is allowing my general contractors to be able to put food on the table for their families, and then it's just continue to go on and go on and go on, and just actually like I said, just leave like a great blueprint or a great footmark on this earth right here, because that's what it's all about. Because if you're not a good giver, then it's like, how can we actually like kind of do our job, especially with all the knowledge? And, a lot of people, they chase the money all day, every day, but it's like you can be the richest man in the world, but if you're not helping nobody out or giving to some sort of charity or just giving back in some way, then it's almost like you kind of feel like empty inside.
That's exactly it, man. We have, I don't take this opportunity that I have lightly to be able to do what I do and to give back. And, it's a special thing that we're able to do. And real estate is an amazing vehicle to propel that wealth, that long legacy building wealth, but also to be able to give back. And it's just special. And I think, the ones that have a good head on their shoulders with good core values and good ethics and all of that, they find a way to add that into their game plan. So
Yeah, that's cool. Yeah, I love it. I love it. So tell me this: do you ever see yourself doing anything other than multifamily syndication, or like 3 years down the line, 5 years down the line, or would real estate just be your end all be all to build that legacy, to build that true wealth? Or like, what is the future for TJ?
yeah, I mean, multifamily is definitely going to be the vehicle. I mean, there's different things that I'm trying out right now. I've got I've got some good friends that do like faceless YouTube channels that are really successful. So we started a few of those to kind of provide, not even provide, but maybe entertain others through YouTube. So we invested in that. Through real estate, though, I mean, I could see myself moving into some short-term rental stuff. I think as the market, and I think in real estate, because real estate is so large, and there's so many different avenues, it's ever changing, right? And as the market changes, whether that's global economics or just your regional local economics change, we adapt to all that. So we might be looking at getting back into some fix and flips if I can build a team around it, where
Yeah,
I can focus on raising money and go from there, while others focus on project managing and taking care of that. But the short-term rental thing seems like something that my wife and I are probably leaning towards here very shortly. We love to travel. We want to be able to take the kids all across the country, all across the world. And so going and having the opportunity to go to these places and invest in these places and own these places and rent those out seems like the logical next step for us. So
man. Look, and that's a good thing you just said about you're able to you like to travel and take your kids all around the world, because pretty much real estate is the kind of key to allow you to do that. So that's why I tell everybody, like some people say, hey, do you invest in the stock market? And I invest in the stock market like a teeny bit, but I look at real estate as being my stock market, because it's a tangible asset. You kind of have some control over it, and you kind of know what everything was going on, and you invest in the right real estate plays. You are able to travel the world. You can actually be on the beach right now. Who knows? You might be on the beach right now talking to me from your laptop doing a real estate deal, because it does give you the financial freedom and it gives you the flexible freedom with your time. Your time is everything, because like right now, we're streaming right now on all these social sites. And like you said, life is forever changing. So who know? We didn't know 2 or 3 years ago that we can actually sit here like we're in the Jetsons and actually stream live to all these social sites. So you have to be willing to change with the times. You got to be willing to adapt to the times. Or it's almost like you'll kind of get rolled over a little bit.
yeah, certainly. I think again, going back to kind of when we started all of this, I had a game plan that we thought was going to be, the holy grail, right? Like it was, there's no way that there's holes in all of this. And, we found out that that's absolutely not true. But the other thing with that too is that, the what and how we did things and the limited availability to mentors and coaching that I had, um, dude, it took me two deals, and let's just throw the third deal in that technically I became like financially free. Real estate made sure that everything was taken care of and then some. And that's something I thought was going to be years down the road. I'm talking years and years down the road. But the reality of how real estate works and how structuring deals work, it's really important, because I got these two deals. Let's call it three deals. Though my first ones that if I did nothing else but have those, I would be fine the rest of my life.
Man, so pretty much what you're saying is, if somebody is kind of like on the fence and say, hey, should I get into real estate? I don't know what real estate is going to do for me. You just like, you're a firm believer to say, hey, you have to get into real estate because real estate is a life changer. And then on
Yeah.
the second hand, you're saying, if anything else is one thing that you did learn from your ups and downs is you must get a mentor, because in a mentor, they can actually help guide you and point you in the right direction. And it's like a mentor is actually like a freaking blessing, because it's almost like, even if you're out there trying to get into real estate, you don't know where you're going, it can actually be like that. I guess like if you're sinking down a little bit and they throw out the little life jacket or the life preserver, the life jacket, the mentor is the one that actually help bring you up at a fast rate and just have you be the person who you are today. So that's, I mean, like I said, that's the true reason why I started the Legacy Builder Club, because it's almost like I want to do my part to give back, to help people out in real estate, because I believe real estate is the way. So right now,
Yep.
it looks like you're in a house, I'm in my office, and it's real estate. So no matter we go to a basketball game, you're in real estate. You go to a football game, you're in real estate. You go to a soccer game, you go see Hamilton, like you said, you were in real estate. So it's almost like, I believe that somebody has to get into real estate and just start to somewhere, and then you can actually grow and then just pivot up to where you belong. But real estate is the key to generational wealth.
Yeah, I mean, it's one of the first things you said there is having that mentor, that mentee. I was speaking with a gentleman, actually a husband and wife couple that are a couple hundred million into net wealth, and they're amazing. Everyone that's on YouTube has seen them, and one of the things that he said was, like, he still even invest into programs, into coaching, into mentors and all that. He's got more money than all of them combined, but the way that he takes that money and reinvests into himself to learn new things, to grow and to be better. And so, like, looking into how real estate works, like I said, there's so many different ways, right? You could wholesale, you could fix and flip, you can do short-term rentals, long-term rentals, multifamily, office, industrial, commercial, whatever it happens to be.
Everything.
But because of that, I think it's very easy to get overwhelmed and behind. And so with that, like, where, someone might say, like, where do I start, or how do I do this? And that's why I think it's important to understand your reason why, and then understand what that goal is going to be for you. To get in and think it's a get rich quick thing, like, you're going to get your ass kicked with that.
Yeah.
And if you have the right mindset, if you have the right goals in mind, I think the right people backing you, real estate's a powerful tool, man. It's insane.
Man, hey, you just dropped them gems right there, TJ. And then, like you said, real estate is like a huge wide net. So, like you said, and another thing with having a mentor is, it could be like what they call this, the shiny object
Yep.
syndrome. So
Yep.
you just name maybe like 10 different things. So sometimes you try to go in there and get and try to get wealthy off all 10 things, you're going to wind up giving it 10%. So the beautiful thing about a mentor is they can kind of grab you and say, no, we're going to focus on Airbnb first, or no, we're going to focus on multifamily syndications first. No, I mean, I know you said you wanted to do long-term rentals, but to me, it sounds like you like to get your hands dirty. You want to be, and you want to be in an everyday, hustle and bustle. So you might want to do fix and flip. So that is the whole key, where you can actually take somebody, you can guide them in one direction, allow them to kind of like conquer that, and then go into the next thing, into the next thing. And then I guess on a commercial break, hey y'all, I forgot, Instagram is giving us a little issues right now. So go to the legacybuilderclub.com, because TJ is over here dropping his knowledge. So I don't want nobody to miss out. The legacybuilderclub.com if you guys can't get on Instagram. Talk
Perfect.
to me.
Yeah, I hadn't heard it put that way before, but if you've got 100% of the effort that you get to put in, and you've got 10 or 20 different things, they're all spread out, crazy like that, where getting focused on what you want. Again, what is your goal? What's your why? And then let that kind of go from there. Now, that's not to say that as you get into it, that you can't, it can't organically switch and change into something else. Or as you start to learn more, kind of add more into the mix. I mean, when I first started, I was fix and flip. And then when we sold a place, we bought a rental. And I got my feet wet with rentals. And that's kind of what led us to where we're at right now. And I realized, we're putting in a lot of work to flip these houses. And it was a lot of effort and a lot of time, where I can just buy a rental and continue to get paid every month. You're right. And then we bought another rental, and it started off, believe it or not, we had a duplex. Actually, that's not true. We bought a fourplex first, and then we bought a duplex,
Hmm.
and we went from 6 units to the 50 units, and then we went from the 50 to the 56 then to the 232, just like that. But that was our mindset. That was our goal. That was our passion. Was we wanted to be able to put in the work on the front end, set a game plan in place, have it executed by a property manager and the team that we put into, put in order, and then from that, we reap the benefits, not today and tomorrow, but today and tomorrow, where that money continues to roll in. And we structure this deal to where our investors are making good money, where we're making good money. And there's no question about it. This is where I'm going to stay, man. I love what I'm doing.
Man, that's a great thing because, like you said, it's all about a team. So without that strong team that you have, then you wouldn't be able to do it pretty much because it's like almost like one man can't do everything.
Right.
So yeah, that's a good valuable point. And then to your point, now that I think about it, that's how I was able to move from Baltimore, Maryland, all the way over here to Los Angeles, California, because I had a lot of rental properties back there in Baltimore. So that cash flow is important because without the cash flow, it's like you want to be able to make money while you sleep. That is the key pretty much. And it's almost like to me, I almost, when I'm doing my investments, I always like to invest in businesses and real estate where as though I can kind of like tell myself I'm kind of living free because you have so much cash flow coming in that you can kind of like skate for a while pretty much. And that should be like some sort of key that you just set up. And like for what you always say, you say like your why. What is your why? That is an important thing because if a person comes into it not knowing what their why is, and how can they actually achieve the results or whatever they want pretty much.
Yeah, I mean, we follow this thing. When I first got into it, one of my role models, I guess, my mentors of sorts, was really big on this thing called a VTO, so a Vision Traction Organizer. And it's a
Mhm.
pretty simple document. But what I found really interesting is the very top of the document. The first thing that it says is core values.
VTO.
And it's interesting because if you look at it at face value, it's just like, okay, fill this stuff out, right? It's another
Mhm.
form and
Mhm.
whatever. But it's really meant for you to create the vision, to gain traction and have it all organized in there, VTO. But having those core values and then your reasoning why, right? And something that I've kind of learned throughout doing this is I don't negotiate with any of those core values. If it doesn't fit all five of those core values of what we do, then it's not a deal. We don't do
Yeah,
it.
yeah.
And if it does, then it moves into, okay, does it fit our game plan, and is it going to help propel us further to our why and create more opportunity for our why? And if it doesn't, I don't do it.
Mhm.
And if it does, then we get into the nitty gritty. Then we start looking at numbers. Then we start looking at opportunities. And for us, it was important that we had that structure, we had that purpose, and we have that why. Because again, like in the very beginning, I said, my family is all entrepreneurs. Everybody in my family, from my aunts and uncles and cousins, everybody has a business or a part of a business that is
In the
fans.
blood.
And it's one of those things where, like, I always knew I wanted to do this, right? And I was super proud of what my family created, and I want my kids to be equally as proud as me, right? Like, I want to look at them, I want to be able to go to their events, I want to not have to worry about asking for time off or whatever it happened to be. So the financial freedom that real estate created kind of just helped build our why, and then help build that out even further as we continue to grow.
Man, that's a valuable point. I forgot. Man, that is something valuable you just said. You don't want to have to be able to ask for the time off for 15 minutes to use a restroom and all that. I forgot all about that because I mean I've been kind of like entrepreneur since I've been 15. So I always did tell myself I never wanted to say, hey, can I go to the restroom? No, Jones, you can't. No, you gotta sit on here, be on that computer and call those daggone leads. But
Right.
then you said something valuable as well. You said about it's almost about which your VTO is about manifestation. So you kind of write the script for your own movie. You write out everything, and it's like through the power of manifestation. If it doesn't come the way that you spoke it or the way that you wrote it down, then you can't get into it. And that's so great about manifestation because it's actually you can actually through the power of God, you can actually like speak your fate and your destiny truthfully because you can actually like write the own script and you just live it each and every day. So it fits into those into your five core values, and you already know what results you're going to get because you already wrote it down.
Yeah, man, that's it. That's exactly it. Exactly what we're talking about.
Yeah,
Yep.
man. Yeah, I love
And
it.
that document it's so simple. Like, it's they don't ask a ton from you. They just say, like, get your stuff together. Like, what is important to you? What is it? And then if you really follow it and you really look at it, it's just setting you up for success, man. Like, follow that stuff, look at it, and then collaboration with people, right? Getting into these groups, whether it's paid, whether it's free, whatever it happens to be, but be around like-minded people that are going to help propel you further. Not so much like, though I buy into it, I'm not so much talking about like your net worth is your net worth is your network kind of scenario. It's more like, if I'm surrounding myself with go-getters, if I'm surrounding myself with like-minded real estate professionals, I'm only going to push further or push harder to get to my goals because we're able to collaborate and bounce ideas off of one another. That's why, like you and I met in this awesome group of people that just it's kick ass, right? Like, we get together, we talk about, some I don't say low level, some like smaller real estate stuff, trying to walk
Mhm.
through, help people that are just starting off. And then we're dealing with people that are, much bigger than you and I as well. But everyone's collabing, everyone's working together and helping propel for the greater good. And I just think that those masterminds and those little networking groups are huge, especially when they're organized and they're backed by the right people for sure.
No, you're right. I mean, I guess they say on sharpens on, and I mean, I really didn't realize that because I just started being a part of masterminds. I would say, I think RPM was one of my first, and then
Really?
from there, yeah. Then from there, I went to Clever Summit. No, it had to be either RPM or like sub two. But I'm realizing as you like you said, as you start to be a part of these masterminds, you with like-minded individuals, and then you realize that one man can't do it on his own. You just start squatting up with people, you just start collaborating, and it's like
Hmm.
you get like a longer reach. So being a part of these masterminds now, I can go over in Boston and do a couple of deals in Boston. I have somebody over in Alaska. I can go in Alaska and do a couple of deals. I can go to Charlotte, North Carolina, and then, like you said, is a whole bunch of like-minded individuals. Whereas though, so if I try to do it all alone by myself, then I might have 50 doors right now. But if you team up with somebody else, and you'll be at like 200, 300 doors, and that's what it's all about, pretty much. At the
Yeah.
end of the day, because you're hanging out with like-minded individuals. We all here to provide for our families, and we all here to leave some sort of generational wealth or some sort of a legacy. And that's a beautiful thing.
I love it, man. And it's yeah, it's special. It's special. Like, again, like, I just think back to, when I was a kid, trying to like understand why, like, like my mom and dad had to work or whatever it happened to be, right? And I just I don't want to have to do that. Like, I don't want to have to do that. My wife, we're fortunate right now to have my wife be stay at home with our two little boys and raise our kids, right?
Mhm.
I love that. I love that we have that availability to do so. I love the fact that if I need to take off or whatever it happens to be, I can be there for the kids or be there for my wife, and we can do the things we want to. And real estate's put me in front of some really kick-ass people, yourself included. That it's just like you. I never would have met the likes of you guys, man. It's just really cool how this all plays out, and I'm just fortunate to be here for sure for it.
No, I mean that's a blessing because once we first met, it was just all like I said, the group. It was all just all love from like day one, pretty much. Dana, what do you need? TJ, what do you need?
Yeah,
It's
man.
not nobody. I'm not trying to take from you. You're not trying to take from me. It's a whole bunch of givers. So I believe, like part of the mastermind RPM that we with, everybody is just giving. So like the more that you give, the more that you'll get blessed, pretty much. And I mean, I love it,
Yes,
and
sir.
yeah, I love it. So tell me this: is it any? No, not even a question. So I want you to, if you can, break down a scenario of how that 260, 232, or 200, was it 232 doors or 262 doors?
232. Yep, the first year.
So 232 doors. Can you break down that scenario kind of like a little bit, if you can, from like start to finish on purchasing it, raising the capital, like kind of like break down the scenario in numbers, or just like we could close our eyes and just wake up and look, or put ourselves in a movie walking through that 232 unit purchase.
Yeah, so my first purchase, I think this is the coolest story about what I have here. So I'll focus on the first one here. So
Mm-hmm.
when I first got thinking about, getting into all of this, I was sitting in a meeting Not a meeting. I was sitting in a conference in Las Vegas, and it sounds corny, but I was sitting there listening to a gentleman talk about raising money and how it all works. And I was like, I can do that. I did that with my flips. I was raising 150, 200, 300, $400,000 for these flips,
Hmm.
and I didn't want to have to keep doing that. I wanted to do it one time and see what all happens. And so I honestly, I heard that and I didn't go to any other meeting in the rest of the conference. My entire mindset was like, okay, how do we do this? And I got talking to people in the hallways of just like, hey, I'm gonna syndicate deals. I'm gonna raise money for deals. And they're like, cool, like go you. What like that happened, right? And then I got back and and I've got a really good friend. He's a business partner now, but at the time he, most importantly, I guess, he was my attorney, who became friend, who became family to me. And I was talking to him. I said, "Hey, I'm gonna buy 50 doors this year." And he's like, "Cool. Like, let's figure that all out. Let's figure out how to do it and structure it and whatever." And I just kept calling after calling brokers and property managers, and I didn't know what I was doing, man. I was just trying to find a good deal, and so I found something I
Hey,
thought was a good deal. It was 48 units. They wanted 2.7 million for the deal, and I analyzed the deal, and the most I could pay for that deal was 2.2 million.
okay.
And so I called up the broker and I just said, "Hey, I like your deal. I like the numbers. I would like to make an offer, but like I don't think I can make an offer what you're asking for." He said, "Well, how much can you offer?" I said, "I can offer 2 million. That's all I can offer." And he's like, "Yeah, no, we're not going to do that." I said, "Well, here's the deal. Put it in front of the seller." I sent him, like you hear those stories of like the when you're a first time home buyer and you leave a letter for the seller, it's like, "Hey, here's who I
Oh,
am, here's what I'm doing," right? I did that. So I
love
wrote
that.
and I said, "I'm trying to build a legacy, leave something special behind for my two little boys. My wife and I are expecting, or we just had our second kid. We're looking to grow and to build an awesome family and yada yada yada." And the broker calls me back and says, "I don't know what the hell you did, but the seller's going to counter. He wants to counter at 2.5 million." And I
Mhm.
said, "I can do 2.1." And so he came back. He's like, "Dude, you got to meet in the middle. Like, there's more negotiation there." And he came back, and all of a sudden, I get a call from a number in that area. So I answer
Mhm.
it, and I was like, "Hey, this is TJ." And he says, "Hey, this is the seller. How are you? What are you doing?" I said, "Well, that's kind of strange. You have a broker. Shouldn't we be talking to the broker?" He
Yeah.
goes, "No, no, I got this negotiation handled. Here's the deal. I'm getting all of these offers from pretty like established companies that is, they're looking to, they're looking to buy this property, but they're gonna repurpose it. They're going to take our tenants out. They're gonna kind of take away all these things that we created. I don't have kids. I don't have a wife. I want to move to Florida. I want to sell this stuff and ride off into the sunset." He said, "So here's the deal. Final offer, 2.2 million. Can you do it?" And I said, "Yeah. I mean, that was the number, right? Like that's what happened." But what I didn't know, bro, this is the part that cracks me up every time. What I didn't know is I thought like I'd have some time to raise money, like I'd have time to
Yeah.
do all of this. And he said, "Hey, we need 45-day close." I'm like, "Phew, okay." Like, yeah.
Showtime.
So I ran the numbers. We were going to build up some cash reserves. We're going to raise money for cash reserves. We were going to raise money for the repairs needed, the down payment, all of that stuff, right? And that came out to be just shy of $1 million. So I put it out there. I started networking, having conversations with different people in my network who introduced me to more people, more people, more people. And
Mhm.
I remember this as clear as day. And I used to have it on my whiteboard just to remind me. It took 328 people to raise $930,000 to close on that deal. 17 people invested.
Yeah.
15 of them I had never met. It
Okay.
was because it was in the midst of COVID, so I didn't get to meet them. All we did was Zoom calls,
Zoom
and
calls.
so
Okay.
so I met everybody, built up rapport through Zoom calls, which is still wild to me to think that that's how that all played out. We raised the money, but we were struggling to raise the money, and we got to basically about the 30th day where our finance contingency wore off, and my attorney called me and he says, "Hey, oh, do you have the money?" I said, "No, we're about 400K short." He's like, "All right, well, let's cancel this. We got to cancel the deal, kill the deal. If you don't have the money, like whatever." I said, "No, not going to do it." I'm gonna close on this. I believe in this.
Yeah.
So I called the seller back up, said, hey, I need some more time. He says, put another $50,000 down. You can have as much time as you need, but every time that you need an extension, it's going to cost you 50 grand.
Okay.
Eventually you're just going to pay this thing off if you keep asking for extensions.
Yes, you extended for 10 years. Thank you.
Yeah, right. Hell, I don't care, man. I was like, it's a little seller financing way, right? So I put $50,000. I had raised money from the investors. I put that money in, and in theory, like that money went hard. Like if I didn't close on it, I would have lost that money. And I was like, well, I
Yeah.
have to close now. And so we closed on a Thursday, and I had all the money that I needed and then some on Monday.
Mm-hmm.
And Tuesday I sent an email out, said, hey, we're closed down. And by that time on Tuesday, I had $400,000 more than I needed. So I had to basically tell everyone, hey, I can't take your money. We're fully funded, blah, blah, blah. So we closed on that deal. And then I realized, man, I've got 400K. I can do this deal again.
Where's the next deal? Yeah.
But before I did that, I took a step back, and as I was planning and structuring all of this, my attorney said, he's like, all right, so what are you going to take for an acquisition fee? I was like, what does that mean? He goes, well, when you buy this, like, a syndicating, when you're syndicating, you get an acquisition fee. I said, really? I said, well, what does that mean? And he says, well, you're going to get paid by the investors to buy this property. So the day that I closed on that property, I was wired $100,000, $100,000 as an acquisition fee. That's what I took. So I got paid $100,000 to buy the deal. I get paid 3% to manage the property. So whatever the property brings in, I get 3% of that, and I split the cash flow in perpetuity. And then the way I structured everything was, so for instance, let's say like I had a 3, 4, 5-year game plan, however we're going to do this. And let's say that in year 5, I'm going to refinance the money.
Okay.
I refinance and I give the investors all their money back. Usually at that point, they're usually out of the game. They usually don't make money, whatever. They certainly don't split in profits. So what I did was I structured it to where we split cash flow 70-30 in the front end. And then once I gave them all their money back, then I got 80% of the cash flow. They got 20% in perpetuity, but they had no money in the deal anymore. And they got 20% of the profits when I sold, whether that's 10 years, 15, 20, 50 years from now. They share in those profits for life. And so that was able, in the midst of COVID, when people were worrying about money, they were worried about, what's the next thing. We created sort of a program and a structure that was able to make them cash flow for life. And that helped us raise all the money. Then it helped us get into the second deal. Then we oversubscribed in the second deal, and then went into the third and fourth and fifth, and it just continued to grow from there. We knew the proof of concept was there. We knew how it all worked. And it was just special how it all kind of played out.
No, and it seemed like, you did good business. So in good business, you always make sure that everybody wins. So, in that deal, you were 400,000 over to take you on to the next deal. And then, you wrote up everything whereas though once everybody got paid off of this deal, they're going to always want to invest in all your other deals right there because they see that they won. And that's how any deal should always be structured. You should win. The investors should win. So everybody's it's not all about the deal today. It's all about tomorrow. And it's about freaking just building a fort.
Yeah. I mean, that was our game plan, right? Is that if we could continue to build something special that investors wanted to be a part of, that after we returned that money and after we performed, that they would just reinvest, and then we would have all the money that we made them for those 3, 4, 5 years plus their initial lump sum, so we can buy another project and another project and continue to roll from there. And it's worked that way. Now, don't get me wrong. Like, we've had some bad times. We've had some scenarios where things did not go as planned. We've had some times where those conversations with the investors were not rainbows and butterflies. They were not, the best and happiest of times. But the majority of times, overwhelming majority of times, we have been able to hit our goals, hit our numbers, move forward, and create something special for us and for the investors.
Man, that's a great thing because in investing, nothing is guaranteed. But like you said, as long as you win more than you lose, and that's what it's all about. So it sounds like you're over there winning. And I just love it. I love the energy. I love the game plan. I love everything that you're doing, TJ. Keep up the great work.
I appreciate that, man. Yeah. When are we getting you into a multifamily deal?
I'm gonna have to. I just finished up one deal for my drug rehabilitation program that I'm doing over there in Baltimore. So it's like this little doctor's office right there. And I finished up like the single family house to actually put the tenants in there. So I said I was coming over to multifamily, so I guess I'm going to have to come around.
My man.
I want to get
Well,
into it like, I want to get into it like ASAP. So even with the Legacy Builder Club, you know, once we kind of convert, you just show me about my first one, and maybe you can actually come in there and then start teaching people in the Legacy Builder Club as well too. So
yeah, man.
build, you know.
I would it's just something that I've become, pretty passionate about. I mean, we've got a group right now, like I said, the Multifamily Millionaire Mindset, the coaching mentor program that we created, that we've got 28 people in now. Weekly, we talk about real estate, multifamily real estate. We've got some that are one-on-one students that I sit down with, I create game plans with, I structure things up with them. I basically interview them and learn about what they're looking for, their financial freedom goals, their whys, their whatever, put that all together, create a game plan for them. And then we look to execute and get them into their first properties and then continue to grow from there. And then we have the group side of things where we meet weekly. We meet Wednesdays at 1 p.m. Eastern. We chat multifamily real estate. Every other week, I have a guest speaker come in that is, last week it was about red flags and due diligence. A couple weeks prior to that, it was financing in today's day and age, what to look for, what banks look for. So just different professionals that can provide some feedback to them and to grow. And I would love to do that. Maybe there's a collaboration between the two of us that we can put something together and help people get into a deal. We're actually talking right now. Kind of started as a joke, but now it's kind of turned into something. Is within our group, whoever's in the group, we thought the best way to be able to kind of learn, through the collaboration and all of that, even better than that would be to buy a deal together. So we're the 28 of us are talking about just raising the money, structuring the deal, doing it all together, finding a deal, and purchasing our multifamily deal through the group. So pretty cool.
Yeah, that's the best way to do it pretty much because it's all hands on. So it's 28. And so some might be a little newer and some might be well experienced. So it's like, yeah, and then that's even more buy-in. That is the key component to actually having a group pretty much.
Yep.
Yeah, so you got to do it all together,
Yeah, I mean, we've got one guy in the group that he'll probably be over 300 units in the first 16 months of him being in multifamily. He's a go-getter. He's worked really hard to get there. So we've got that. We've got people that have haven't bought any multifamily deals yet, but they're learning, they're growing, they're trying to build. They're trying to do all of this, and we've got everything between. We've got people that have a pretty extensive single-family portfolio, and they're looking to now get into multifamily. We have people that have done multifamily, but it's all been their own money. They've never raised money or structured a deal or learned how to syndicate, anything like that. So it's it's all different walks of life. Usually there's 6 to 10 people on the call at any given day, and so there's a lot of collaboration. We have an online community that we're building of just meetings that we're going to. Actually, I just had one of the students today. He introduced me to a networking or to a conference. I had no idea it was even out there, and so we're going to meet in Vegas for this conference. We're going to get together. We're going to have a nice, community dinner, get together, be to the event and kind of go from there. So, it's awesome. I've got friends. You mentioned Baltimore. I've got a good friend, a fellow investor that's doing the same thing out in Baltimore, who's killing it. So this is something that you can do, whether it's your hometown, whether it's right down the road, whether it's right at your feet, or whether it's across the country. You can do this if you have the right team, you have the right knowledge, and look to execute and create something special here.
Man, it sounds like you done converted me over to multifamily, didn't you? Like I said, nah, man, I love it. I believe our steps are ordered. We are supposed to be at the right place at the right time. So yeah, I mean, we most definitely going to do it. And I am in Baltimore, but like I said, in Baltimore, I have like a lot of single families over there, and I have 2 commercial properties. Like I said, a doctor's office and a mixed-use property. But multifamily is one thing that when you have a single family, and then it's vacant, then it's like you're not getting no income from there. So if you have like a 50 unit or 100 unit, you can have like a couple units vacant, but you're still getting that cash flow.
Yes, sir.
So, yeah,
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 I
yeah.
mean that was the other thing too. Like when you get into it, like you just said, when I've got a single family and I go from fully occupied to fully vacant, I go from 100% income to zero income, right? And I have a couple people that are like, well, yeah, but when you buy a lot, you've got all that oversight and all of that liability and all that. And I would argue that it actually lowers your liability. You build in such a contingency because if you've got a portfolio of 500 units, right?
Hmm.
You have one tenant leave, it doesn't even move the needle. It
Yeah,
changes nothing for you.
yeah, yeah,
Now, there's a lot that comes in between, purchasing and getting to that point. But if I've got a fully renovated unit, I've got something that's rentable, I've got a good area that I've got good marketing in place. I've got a tenant that leaves. Really, I should be within like 14, 15 days that back on the market and hopefully have somebody back in before 30 days. I only lose 1 month of income. So whether that's $600 or $1,000,
yeah,
again, over the course of 500 units for the year, that changes nothing.
no,
It's a rounding error for a lot of, a lot of scenarios, right? So, you build in a lot of these contingencies, you have a lot of safety nets that are in the multifamily game. And, you hear everybody say this all the time. It's just an extra zero, right? You look at these deals, you go from 100,000 to 1 million. And that jump is big, man. It felt big. It was big. It is big, but it's much easier than it looks and it sounds. Getting
yeah,
in there, analyzing these deals, building out a game plan. If you know the market, if you know your numbers, and you know what your investors are looking for, and I mean that like when I'm talking to my investors, do they want short or long-term growth? Do they want immediate returns, or are they willing to wait for a while, right? Are they looking for cash flow markets or appreciating markets? Like what are they looking for? If I can get the right deal in the right area with the right investor, it's golden,
it's
right?
plug and
Yep,
play pretty much. Okay, yeah,
yep.
yeah, plug and play.
And
Yeah,
then there's the power, we haven't even talked about this, the power of like forced appreciation.
okay.
So we're buying a deal right now in Lubbock, Texas.
Hmm.
86 units. It is 65% occupied. So 50 of the units are rented, 36 of them are vacant.
Okay.
Those 36 units need complete overhaul.
Hmm.
So on average, around $8,700. It's actually 8,750 is what it's going to take on average to renovate the units up to market value and standards and all of that. Okay. We're buying it for 3.7 million. We're putting 400,000 in, so we're all in at 4.1.
Okay.
When we get that property fully occupied at full market rents, I'm all in at 4.1. The broker's conservative opinion on value after we do so is like 6.6, 6.7 million. So my $400,000 that I'm gonna put into the property right there
Hmm.
makes a little over $2 million of value that's out there. Then I take that cash out, I pay my investors back, and now it's just cash flow. It's the opportunity. And then when the time comes to sell or refinance again with cheaper debt, whatever it happens to be, I take that cash flow, which is tax free. I can use that for a new investment. I can use that for improvement on the property. I can use that for whatever it happens to be. Pay my investors, pay myself, and then if there's a deal that down the road makes a ton of sense and there's a ton of opportunity out there, we'll sell the property. We'll 1031, which is a tax deferred program that we can roll into another project without having that tax liability. Buy something that's cash flowing, and I don't then at that point I don't need the investors because I've got 1.5 million, 2 million, whatever it happens to be in my profits and my portion that I can just roll right into buying a new property and new project that now I own outright with no investors, and I take all the cash flow instead of 30 and 80 when I give them their money back.
So you
So
got like
there's
250 doors. If you look at it like that, just off of you finding the deal, working hard, having the knowledge to know everything, is almost like you got like a free 250 doors pretty much. You can kind of tell your
yeah, yeah, and here's the other thing though too with that, and I just had this conversation with one of our students in the group, and their financial or their goal for multifamily was they wanted to buy 500 units,
hmm.
and I said that's great. I can buy you 500 units in Detroit tomorrow, right? But it's not what you want. That's not what you're
Yeah,
looking for, right?
yeah, yeah, yeah.
So let's get deeper onto that. So as we started looking a little bit more, and we were looking at their financial freedom goal, and their units goal. And like, it always cracks me up when everyone's like, well, I own like 2,000 units, or I own 1,000 units, or whatever. I don't care how much you own. Like, how profitable is it?
What does it
What is that
mean?
money making? Because
Yeah.
again, I can go to downtown Detroit right now, and I can go buy 500 units in no time. And I just got an email actually right before this call, about an hour before the call. I was looking at it. It's like $500,000 purchase in Detroit. I'm like, let's see what this is. I just wanted to see. So
Yeah,
I
yeah,
clicked on it. It was $500,000, and it got you 72 units.
man.
I mean, that's what is that? That's
100.
hold on a second here. So if I
Both
took
of them read off 500.
72. So yeah, that's less than $10,000 a unit. It's at $7,000 a unit.
That's
That's
7,000 a year. Yeah.
right. That's insane. So
How much is
like,
this gonna make you? Yeah, like
yeah, like, but like, do you want to own that property? Like, is that what you want? Like, is there something that's going to make you more money with less liability, that's going to appreciate better, that's going to grow better, that's going to have the opportunity for you long term and short term? That's not it. But there's something out there, and whether it's through marketing, whether it's through brokers, whether it's through word of mouth, whatever. If you put that out there, you start talking to the right people, you're going to find a good deal. It's going to be there, and then it's having those systems in place and being able to raise the money, which is the big thing. But then you go full circle, and something that I was told in the very beginning was, good money finds a good deal. If the deal
yeah,
is good enough, if the deal has enough backing, enough meat on the bones, you're going to find people that want to invest in that. And so far, we've been really fortunate and lucky with all that.
yeah. No, that's a good thing because one thing about money is, I mean, you have to let your money work for you. So whether from any investor, and then like I heard you said a little while ago, you had to change your mindset when you got into it. So even when some people get into raising money, one thing is you got to change your mind and say, I'm not saying, hey TJ, can you give me 500,000? Hey TJ, can you give me $1,000,000? No, I'm actually giving you an opportunity to allow your 500,000, or give you the opportunity to allow your million dollars to actually make money for you. So I'm not
Yep.
really asking you for anything. I'm just giving you the opportunity to kind of get on a gravy train, so that way, your money can work for you. Because
Yep.
every day you have to pay for gas, you have to pay to eat, you have to pay to take trips. So every day in life, your money should be making some sort of money for you. If it's not doing that, then I could kind of say a person is kind of going, like, I don't know, in the right, in the wrong direction, but you at least want to go in that right direction, pretty much.
Yeah, that's exactly it, man. I mean, it's you know, it's I thought real estate in the very beginning, when I graduated high school, what, '04.
Hmm.
So 2007, '08, '09, I was kind of taught, and I kind of learned that real estate was a terrible investment. You never do it. But as I educated myself more in how the process worked and what happened during there, it had little to do with real estate, and almost everything to do with banks and lending and how that all worked, right? Fast forward to today, I mean, you're seeing Signature Bank collapse, you're seeing Silicon Valley Bank collapse, all this stuff. Like,
Yeah,
it's if nothing else from all of this, learning how your money works, learning where to put your money, how to invest that money, how to make more money, and how to have that money make more money is entirely you know paramount right now. Taking that capital, being able to invest it into something that you can have a little bit more control over. One of the things I like to pride myself on is teaching people how to take money out of the market, without fees, without penalties, without that issue. Roll it into a self-directed IRA where you have more control over what you invest in, who you invest with, and all of that. Because at the end of the day, you wake up in the morning, the bell rings in New York, the market's turning over, right? And somebody gets a hankering that they don't like, what's all happening. You could go from top of the world to losing 30-40% of your net worth like that.
you have no
Where
control.
in real estate, when the market goes up, the market continues to go up. When the market goes down, you still have a tangible cash flowing asset that your money's tied to, right? So at worst case scenario, if you just sold at like your break even point, what you got in for, nobody lost any money,
Basically, yeah, yeah.
right.
When
So structuring it that way and kind of posturing, for the investors to understand, like, your money doesn't just go, and I don't just spend your money willy-nilly. Like, I put it towards an asset, it's held by an asset, controlled by that asset. I have rules that I have to follow as an investor, as an operator, to be able to control your money, to be able to make your money make money, and and then pay you out accordingly, right? So like, I pay out quarterly. You get a quarterly check or a wire or whatever it happens to be, a
Mhm.
quarterly report, and you get to see kind of where that's all going. And you know, I, I love it a hell of a lot more than stocks in the market right now. And teaching people how this all works is become, once you get that mindset, once you get that understanding, you get somebody to get on board, and then you make that one investor happy, and they introduce you to everybody
Yeah,
else.
yeah, that's
Then the
oh,
world's your oyster, man.
yeah. I mean, yeah, you're right because people always do business with people who they know, like, and trust, pretty much. So, long as you don't, nobody loses and everybody winning, you're a great guy. They know you, they like you, and they trust you. They always gonna say, "Hey, TJ, yeah, he's the one. He's the one with the golden hand." So you kind of you kind of go
I,
with
I wish my name was Midas, but no, that's
him.
at the end of the day, like we've got some things that we can control, certainly.
Mhm.
And then it's risk threshold and mitigating the downside of the investment, whatever that happens to be. So handling where you're investing in the market, you don't have to really worry about anything, right? You just let it go and you grow. And is it going to make money? Yes, over time, historically, it will always continue to grow, and that's all good and well. Um, when you get in, is going to determine how much money you make, and yada yada yada. But with real estate, it's it holds that tangible value, as long as you're not letting it run into the ground and slumlording this thing. It's going to continue to grow in value. You're going to make cash flow. It's going to have cash flow from your tenants. My biggest concern, as a joke, I said this, but this is what happened. I had a tenant call me and ask me how I can get rid of the ghost in her apartment.
Mhm.
I was having a bad day, bro. I was having a real, I was just a real hell of a day.
Yeah,
And so
yeah,
my
yeah.
immediate comment to her was like, you know what? I personally don't have Dan Aykroyd's number or Bill Murray's number, but if you can call the Ghostbusters, let me know and I'll reimburse you. And, and I was like, man, like that was my biggest concern. Like I have to deal with these tenants, and so light bulb moment, right? Like, aha, I'll just pay someone to do that. And so
Probably
instead of me
been
trying to take all these calls and field all these calls, now I'm paying somebody to have to do that. And I hear the stories, but I don't have to deal with them. So that's
that's
nice.
one thing.
However, recently I did just get a tenant somehow get a hold of my number, and she's been intense to deal with. So whatever systems you need to put in place, make sure you don't have tenants calling you.
Yeah, you always had that buffer, you know? You always
Hell
had
yeah.
a buffer. But TJ, I'm telling you, man, we've been on here for like over an hour and you dropped nothing but knowledge, jewels,
Oh
and all
man.
that other stuff. And it seems like we're gonna have to do another Mogul Mondays. I think it's gonna have to talk about money, about the value of money, how you can let the money work for you. It seems like it's
Sure.
almost like another little spinoff. It's like we can kind of go on for like a couple hours.
Hell, man, I'm for it, man. Whenever you need me, whenever you want, whatever whoever's watching and listening is looking for. If there's something I can help out with, you for sure let me know, and I can totally see there being some sort of collaboration that we can create here. I like to do business with good people, and you are on the top of that list, brother.
Man, I appreciate you, TJ. Is anything I didn't ask you or we didn't go over anything that you want to share for the rest of the night, man?
No, man, I just wanted to get on and chat with you about whatever it happened to be, whether it was um, life, liberty, pursuit of happiness, money, multifamily, whatever it happened to be. We're here.
Look, and I'm gonna tell you the beauty of it is it's like it's live. So it wasn't nothing that we talked about. Hey, we're gonna talk about this tomorrow. We're gonna talk about that. It's just all raw,
Yeah,
uncut,
man.
live, and just coming from the gut and just coming on out pretty much. And that's when the best thing is when it's just live and you just get share that great information because everybody is for the information, for the knowledge, and something that they can get to actually transform another person's life. That's what it's all about. And I believe you helped do that tonight, TJ. Man, I
My
appreciate
man. Hey, I appreciate that, brother. No, I love it. If there's another opportunity, or like I said, if anyone needs anything, they more than happy to reach out to me. I don't know if you can put my number down, you can put my email, whatever. If they want to text or call, they want to learn a little bit more about what we're doing or how we can help out. I don't bite the hand that feeds me, so I'll know where they came from. I'll
it.
ask, and we'll kind of figure out what that looks like. But yeah, man, I'm happy to help with anything, and I appreciate you giving me the time to chat with you and go from there.
That's what's up, man. I appreciate you, man. Once again, the legacybuildingclub.com. I got TJ. And as they reach out, then yeah, I'll make sure, because I gotta come over and do multifamily now. And it's almost like you put it out there for me, so I have no choice but to walk into faith, pretty much.
Well, when you do, you let me know. I'll be happy to join forces with you, and we'll make it happen.
Okay. All right. That's the business, TJ. You be blessed. You enjoy your night, and everybody, we just say thank you for tuning in.
Cheers, bro.
All right. Cheers. Later.